Hello everyone, I'm giving you a update for the market, and this chart shows you the latest AAII investor survey for the week ending in October 9th. It's showing us that 49% of the people think the US market is bullish, and 30% think it's neutral, and 20.6% thinking it's bearish. Okay, and this survey is conducted amongst the individual investors, so pretty much a survey for retail investors. And if we put the survey on this chart, so you know where we are historically, this chart shows you the bull minus bear index. So pretty much the green percentage minus the red percentage give you the net sentiment. The higher the number, the better. The more bullish. Currently, it's at about 28. Okay, 28. So bull minus bear. Meaning that there's 28% more bullish people than bearish people. It's higher than the one standard deviation, which is represented in the dashed line here, and the mean of the historical data since 2010 is on this line here. Okay, the mean is just below 5, above 4%. Okay. So pretty much it's saying that the individual investors, aka the retail investors, the non-institutional investors, they're very bullish. And this is the chart from showing the U.S. money market fund, or the total asset value in the U.S. money market fund. It's at a record high of $6.5 trillion. Okay, so what's very interesting in the chart is that they circle to us the inflection point in the past, right, where the direction of the money market fund asset changes. It goes from increase to decrease. Okay, and historically, very interesting, when this inflection point happens, like in 2009, that happened in January of 2009. During the QE, when the QE started, and happened during the COVID, right, 2020 of May. Again, when the QE number 2 started, okay, and that marks the inflection point. So maybe the investors are going to do the same for what's happening right now. So right now, even though it's still making record high, but the inflection point will happen when the eventual QE3 happens. So maybe the market is waiting for QE3, meaning that there's money, they're continue to pile the money into the market fund, and once QE3 happens, they're going to start taking money out, start deploying into the market, into the equity market, okay? And this chart actually got from the latest flow report from Bank of America, and the data is as of October 10th. 2024, pretty much last Thursday. Okay, and this chart, this data shows you the positioning of Bank of America private client asset allocation. Okay, so it's pretty much the high net worth client from Bank of America, and Bank of America manages their money. Okay, so this is pretty much the positioning by the collective intelligence of Bank of America, money management or asset management. And right now they are managing $3.8 trillion in total, okay, asset under management. And as of last Thursday, we have 62.6% in stocks, or represented here. We have they have 19.6% in bond, which is over here, 11% in cash, okay, right over here, and then we have 6.8% in other stuff. Could be like precious metals or whatever. So pretty much the current positioning of their private clients or Bank of America asset management department is pretty much 30% cash and 70% risky asset. Okay, and this chart shows you the Bank of America private client equity holding as a percentage of AUM, or asset under management. Pretty much this number, right, the 62.6 is plotted here. So 62.6 is in the risky asset or equity, okay? And it's pretty much in line with what has happened since 2015, right? We can see a uptrend over here, and pretty much kind of in the middle of this uptrend, okay? So it's not super bullish, like what happened in 2022, where they deploy 66% of the total equity, total portfolio into equity. Right now, it's just like 63. So not super bullish, not super bearish. And this chart shows you some of the flow data from Bank of America's report. Okay, this table shows you the cumulative year-to-date flow by asset type. And this data comes from this organization called EPFR Global. Okay, so this organization, they specialize on providing data for global equity flows at fund level. Okay, their stuff are about ETFs, ETF flows, and mutual fund flows. Okay, and for the week, ending last Thursday, there are $39.7 billion inflow, global fund level, okay, and which consists of $44.1 billion in ETFs inflow and $4.4 billion outflow for mutual funds. Okay, and this $39.7 billion, it's the third largest inflow year to date. Again, it's global fund level, okay, for global equities at the fund level. This chart shows you the inflow of the inflow for China equity funds. Okay, so funds that invests in the equity of China, and both ETF and mutual funds or long-only funds, again from the same institution that provides the data, the EPFR. It's telling us that there is a $39.1 billion inflow for China funds. Okay, it's the largest on record, and this chart is kind of inaccurate. It doesn't match the 39.1. It would be like off the chart. Okay, it would be outside the chart. Okay, $39.1 billion is pretty much all the equity inflow since for the week ending last Thursday went to China equity, because again, the total inflow is $39.7 billion, and the money going to China, okay, is $39.1 billion. Pretty much all of them went to China equity fund. Okay, and this chart shows you the regional breakdown of the flows. Okay, as we can see, China over here, that's the weekly percentage, the weekly flow as a percentage of AUM or asset under management, total asset under management for the week, right? It's 6.1% for the week, right? For China, and the other ones, Brazil, have 1%, and we have Europe here minus 0.1%, Japan minus 1%, and most importantly, most people care about US. US is 0%. This is ETF plus long only fund, so mutual funds. Okay, so even though we're having the third largest year-to-date global fund inflow, and the largest on record for China fund, but this is all going to China. The U.S. is a 0%, net 0% for the week. Okay, and I think that's a very important takeaway here. Thank you very much for watching. Please don't forget to like and subscribe. And you like the insights, the data like that, right? Just subscribe, and I upload my content very frequently. Thank you.